Yes, when you check out the figures and you see what has been the momentum property investment has gained throughout the last 3 years, you see that the most, as you say, hot assets in properties are offices and retail. And among retail, we can count of shopping centers as well as high street retail, prime, and bank branches inside those high street retail. And I honestly see that there's still room for those sectors to keep on there. Why is that? Because, as we said, in terms of returns, when we combine the performance from occupation and the capital values, the perspective is still good. It's not extraordinary, but it is still good. Why is that? In terms of performance coming from income, we see that rents have not increased as fast as we wanted to, and our forecast actually 2 years back pointed to an expansion of rents in an average, for example, for Madrid or Barcelona, around 8%. And when you saw those forecasts at the end of the last year, you saw something smaller, somewhere around 5%. So that is the catch-up some investors are saying is not happening, and that is because some people say that we are not going to get to those returns. But my view in it is that the room for improvement is not only coming from the driver of increased rents, it will come also from occupancy. When you check out the vacancy rates of retail assets or offices around the main cities in Spain, you see that there's a strong differentiation between prime zones and secondary zones. So 2 years back, what we used to say was, okay, we have a two-speed market, for example, in offices. We have the CBD, which is doing well, and prime rents are increasing, therefore, and the expectation of the capital markets would move with anticipation are compressing those yields. And secondary locations, forget about it. It was 2 years ago. Now we are starting to see those secondary locations to enjoy some kind of spillover condition of both the occupation and the demand, both from the occupants and investors. So secondary locations are starting to get into the market. And that applies for retail and offices. The other hot asset I see for Spain is definitely hotels. And in our recent research for hotels, what we namely said was, okay, Spain has gained since 2011 something around 14 million new visitors from abroad. That is a lot of people, actually. And that is driving up the performance in hotels. And a part of that, you're seeing that the performance in terms of the average daily rates of the RevPAR of the hotels has non-stop increased. So that is another opportunity. And there's kind of internally opportunities across the cities. So, for example, prime hotels are sought after, of course, by investors, but we can also talk about the value-added strategy finally got into the hotels, in which some capex would do very well for a hotel in a city such as Barcelona, southern Spain or the islands.
No, I agree with both Ramiro and Juan. I think residential is very interesting. Unfortunately for us, it doesn't really yield the type of returns for the type of capital structure that we have. So I think it works really well the way that they've done it, and I think it's definitely a good sector to be invested in. It's just unfortunately for us, we've found it difficult to meet our objectives. Hotels, on the other hand, I think is where there's a great amount of opportunity, and it's very clear that the macro tendencies of the market have been excellent in the last couple of years, and I think will continue to be good for a few years. I'm not sure that that's a 20-year phenomenon. I think it's based in large part, or to some degree at least, by external factors related to other destinations that have become very dangerous and out of favor as a result. I'm not sure that they will be that way forever, or at least I don't really want to count on that. But what I do think the advantage or the opportunity in Spain is a very fragmented hotel market, dominated by a lot of small family operators and hotels that desperately need refurbishment and more professional management. And that actually is, I think, a very interesting opportunity, and one that we're trying to focus on more. And I guess if I can add one more, I guess a bit of touching on what I said initially. You know, the office sector is something that we like a lot. Would love to be able to do things. Have been priced out of buying existing office buildings pretty much completely. And where I do think there's an opportunity is development of new offices. Actually, I mean, we actually had one that we sold. I think that's a unique case. Frankly, the reason we haven't done a lot more is really a lack of financing. And I think that opportunity, refurbishment of good quality or good, well-located offices, or development of new offices, I've heard spoken about on panels. Maybe it's been me speaking, but I think some other people have agreed as well for I don't know, a year, almost 2 years now, maybe. But without financing, it's very difficult to speculatively develop offices, and there still is very, very little financing for speculative office buildings, despite if people say something different. I've yet to see it tested, and I think that's really unfortunate because that is an opportunity for us, and it would be actually a good thing for the market as well.